Good morning. Monday, 14th October 2024. It's Vijay here. Welcome to yet another episode of Pre-Market Commentary. Yesterday, I had made a podcast. I hope some of you have seen it. Kindly go through it. And today, this morning, I have titled today's podcast as Contrarian Trading. Now, why am I titling it as contrarian trading? Is because if you really look at around our surroundings, the environment, every known analyst is very bearish on the market, and in some ways they are justified because if they use technical analysis, then it looks like it is going to be not such a good time. But if you really dig deeper, and then you may wonder whether it is really worthwhile to just look at it. So I'm just trying to put my own thoughts here, and let's have a look at why the technical analysts are feeling what they are feeling. Now let's look at the Nifty Bank Index, for instance, is very weak. If you look at the moving averages, one of the simplest things I have taken is the exponential moving average. The red one is the 9-day, the blue one is the 50-day, 20-day, and the dark blue is 50-day, and the 20-day is the aquamarine blue. So red 9, aquamarine blue 20, and the 50 is the darkish blue. So price is trading below all these moving averages. So people would say, let us sell on every rally, or what I would call sell on strength. But if you really go back and see some time ago, this is in August, early August, when there was a problem because of the yen, all the prices were trading below all the moving averages. But then what happened? If you get bearish here, you will not know what to do. See, we assume that we are all robots, or we are machine guys, or we are algos, where as soon as the moving averages flip, and our this one strategy also will flip. In reality, it is not so easy, because even in algos, you need to actually fine tune it on a regular basis. So therefore, I believe that if you overall think that where are we in the market, where are we globally, macro, if you do a top-down analysis, so whenever it falls below the moving averages, and when people feel very bearish, and when fund flows are matching, in this case FIs versus DIs are matching, then it may be a time to take a bullish stance. Now you look at Nifty. Nifty, for instance, again for 3-4 days, it has traded below the 50-day moving average. 9, 20, 50. 50 is the blue one. Please notice. Now, if you go back and see, if you see here in May of 2000, just before elections, you see here, this was the time when the prices traded about 4 or 5 days below the 9, 20, and 50. This is here. You see here? This is the time. But let's say you had gone bearish, then you would have missed. In fact, many people have not changed stance from bearish to bullish after elections. I was bearish after elections, but I changed it here when it crossed this particular June 3rd peak, and then I became bullish because something has changed. I felt, because with so much of bad news that the prices continue to go up will mean that something has really changed. So that has held in good stead. Now you take Reliance, which is yesterday I was doing a spaces. Somebody said, how can you be bullish? You look at Reliance. Reliance is dead as a duck. It is below the 9, 20, and 50 significantly. But then I'm also looking at what Reliance has done in the past. Reliance always does this. It throws out people, and then you see, then it starts its upward journey. So there is a high probability that Reliance's upward journey will start from today, or at least from tomorrow, because of the results day. Today is the results day after market. So it is now taking support at what happened on June 4th. In fact, Reliance is probably the only large cap stock which has gone to the June 4th low. There are very few such stocks. Take HDFC Bank, which is again having the highest weightage. Again, it is trading below 9, 20, and 50. But if you see again, you go back to May here, you are seeing that in this particular place, HDFC Bank traded below 9, 20, 50, and then it took off. So not always does the moving averages help. That is one, but this is the most used indicator. So you need to just be very careful on what you are going to take as your technical analysis, and then work your way out. Now let's look at something else which I wanted to discuss, which is contrarian, is this thing about FIIs. There's a lot of discussion about FIIs and talking about, before we, let's talk about FIIs. And FIIs are driving the markets. So if an analysis has been done by Angel One Wealth, they have taken all the financial years for the last 11 years, financial year 2013 to financial year 2024. So the FII net flows are indicated in green here, and the FIIs net outflows are indicated in red. So you see, generally, when FIIs net flows are positive, they were driving the market at that point of time. So 13, 14, 15, 16, FIIs were driving. And on 17, it became equal. Both FIIs and DIIs were buying. So therefore, you had both of them can take credit. But 18 onwards, you see, 18 and 19, DIIs drove the market. 20 and 21, FII drove, though DIIs also bought. It is not that DIIs are not buying. Then you look at what happened from the last 4 years, 22, 23, 24. The last 3 years, they have been just only DIIs and not FIIs. FIIs have been selling, but DIIs have been more or less countering that. So if you really look at it from 2015, financial year 15, you had, 1, 2, 3, 4, 5, 6, 7. 7 out of 10 years, you had FIIs actually being net sellers. So FIIs don't drive the markets anymore. It's very clear. And therefore, if you are worried about what FIIs did in the recent past, then you should take a perspective as to FIIs are not controlling the market. Just let's look at the ownership. The ownership of FIIs at one point of time was about close to 21%. Now it has come to about 18. Actually, it has come to 16 point. It's come to 17, 16.78 as of last month, September 30th. This is the this is as far as I think this was probably in March of 2024. So from 18.19, it has again come below to 17, whereas DIIs have gone to 16. So sooner or later, DIIs will increase their share. Once DIIs increase their share, then all the more FIIs will become irrelevant. FIIs are important, 15% and above is important, but by and large. And domestic mutual funds are having 9% of the share, which is at an all-time high. The FII-DI ratio is at an all-time low, which means FIIs no longer have any great stake in the Indian markets. So sometimes it is good that way it happens, because we are all talking about Atmanirbhar. If this a prime example of Atmanirbhar is here. So that is one thing. Then there is another fear that markets will come down this week because of the rupee has hit an all-time low. Now, rupee is completely controlled by RBI. So I don't pay much attention to what happens on a day-to-day basis, but just look at this data. Now, there is a 1.3 trillion bond market in India is facing a very peculiar issue. Investors are not able to get the sovereign bonds because government has reduced, issue of sovereign bonds. Government is the biggest borrower in the market, not corporates. So government is cutting its borrowings. Then what happens is that there is a huge demand for paper, which means the interest rates come down because people are willing to buy it at a lower yield. Especially when we are part of MSCI index, then it's all the more important that with so much of money coming in, interest rates will automatically come down into the system. It's a pity that the people like you and me will not get lower interest rates, but the banks will benefit, government will benefit by this kind of lowering of interest rates. So what we should do is that we should not just go by the traditional parameters. Look below the data and you'll be amazed at the kind of strength our market can gain, all things being equal. As I keep saying, I'm very concerned about geopolitics. Luckily, over the weekend, Israel had something called Yom Kippur holiday, which is a very holy day. In fact, the 1973 war between Israel and the Arab countries happened on the Yom Kippur holiday. So I was dreading that something may happen. Nothing has happened. Global markets are strong. Of course, the Chinese markets were in trouble, especially Hong Kong, because that is what we discussed yesterday. So all said and done, I go cautiously bullish. BTFD is my mantra because of all these factors. I'm working contrarian to what most people are thinking. Let us see what happens. Whatever you do,